Hello everyone, it is Nicholas from Aussie Money Man. So I highly recommend sticking it out for this entire video, even if you watch it in parts or watch it while you're driving or whatever it is. This is an interview I worked very hard to get. Robin Powell is one of the authorities and one of the best people I could find to really share the message about evidence-based investing. So he's one of the authorities on evidence-based investing. And I, along with Ben Felix, these are definitely the two people I highly, highly recommend checking out if you wish to invest in a manner that is the most effective, but also you know it's the most effective as it's based on evidence. All right, let's jump into it.
All right, well, let's just start off. So, Robin, thank you so much for coming on to the channel today. Do you want to just give a bit of an introduction to yourself? I know you wear quite a few different hats.
Yeah, I'm a journalist, and 10 years ago, if you told me that, in start of 2021, I'd be purely writing and producing content on financial services and investing, I wouldn't have believed you. Basically, I was I suppose a general sort of news, current affairs hack, if you like, and set up my own production company in 2010. And literally one of our first clients was a financial advice firm who had this passive approach, as I used to call it then. I tend not to use that phrase very much anymore. But anyway, looked into it. We produced a 75-minute documentary. We went to the US and various other places to interview academics, Nobel Prize winners, senior people in the industry. And I'll be honest, I was gobsmacked at the fact that there's all this information out there about how we should be investing, and yet not only does the vast majority of the investing community do completely opposite, we're actually positively encouraged to do so by the industry and the media. I just decided that we've got to do something about it.
That's brilliant. Absolutely. Well, I mean, that's exactly the thing I've jumped on. I think you mentioned in there you've created a documentary. I think I saw you've created 3. I did try to watch all of them before I had a chat. You're really the guy to talk to, when it comes to yeah.
Well, we made the first one. It was called Passive Investing: The Evidence, of course, in the US, this stuff has been known for quite a long time. I mean, to be honest, the research out there that shows that active management is a bad idea. Picking stocks, picking funds, timing the market is a bad idea. The evidence has been out there for without going into it, 80 plus years. But even still, there's much more awareness of this in the US than there is in the UK and Australia. And when I started putting this out, people just thought, "Who is this? Who is this nutter?" But just in those few years, things have massively changed. I mean, well, as you know, in Australia, you've had the Hayne Commission. And all this stuff is coming out now about how the super industry is basically out there to look after itself rather than look after consumers. And we've had the same here in the UK. We've had a couple of reports from the Financial Conduct Authority, which have been very critical of the fund management industry. We've also had a massive scandal, which you may have heard of, called the Woodford scandal. Neil Woodford was our Warren Buffett, if you like. He achieved great things in his last job. For those who obviously stuck with him, because he, as all active managers do, they have terrible periods of underperformance. But over time, if you'd stuck with him, you'd have actually done very well. So when he set up his own firm, Woodford Investment Management, in 2014, everyone assumed that he would deliver great things. It was an absolute disaster. global stock markets went up and up, and his fund went down and down, and lots of people lost a lot of money, and it's really made people here in the UK think, well, maybe that Robin Powell guy and the evidence-based investor, his blog, he maybe they were right all along.
And I guess my question from there would be, you mentioned, basically, these corporations like the super industry, the pension industry as well, I suppose you could say, are out for themselves. Would that be the reason that you'd say there is this huge, or this massive amount of misconception out there? Like, just almost everyone I speak to, for example, here in Australia, is investing in these ways, and they're certain that that works. And I get a bit of a similar response as you when I talk about this sort of stuff in my videos, and I go, the evidence is there, and it's not new. This is not cutting edge. It's been there for, I usually say, 50 plus years. And, the big question is why. People go, well, if that was the case, why is it the news is constantly saying what's the next hot stock?
It's bizarre, isn't it? And this is a question that I've asked myself again and again. Why, when there's all this evidence out there that we shouldn't be touching these products, why are we all over them? Why is this still the go-to mode of investing, if you like? And I think there are a number of reasons. I think a really crucial one is the sheer marketing power of the industry. The industry is a hugely lucrative industry. Here in the UK, the FCA report suggested that it makes profits of around 35%, even more, the profit margin, and that's huge. I mean, my business, I would absolutely love a profit margin of of that size, and so as a result, it can actually spend a heck of a lot of money on advertising, PR, and marketing, and the way that you mislead people is you just carry on saying the same thing again and again. And you see it with a few politicians in the world. I won't mention names, but yeah, you keep repeating the same lies effectively again and again until people just think that it's true. The other thing is, lots of people who benefit from active management. And if you think about it, here in the UK, for example, a few years ago, we actually banned commissions, the payment of commissions to financial advisors from fund management companies. But effectively, until that point, financial advisors were effectively bribed. I don't think that's too strong a word either. They were effectively bribed by the fund industry to sell its products. And those advisors now, they're not allowed to use that. They're not able to use that income source anymore. But notwithstanding that, they've got in this mindset over many years. And of course, the older you get, as an advisor, and the more decades you've spent, telling your clients one thing, it's actually very difficult to turn around and say, actually, guys, I may have got that wrong. You actually should have been in an index fund. Sorry about that. I'll put you in one now. That's not how human nature works. And of course, you've got the media, and the media has quite a big influence on investors, not just about newspapers, but magazines, the internet, and so on. And the way that you get eyeballs is not by telling people, you should listen to the Aussie Money Man. You should put your money in index funds. You should, just basically sit there, do nothing, ignore all the noise, and get on with the rest of your life, as it were. That's not the way that you sell newspapers. The way you sell newspapers is saying, there's this great new fund manager. He's really good. He's made, such and such a, splash in, 2020. He's going to outperform this year, or this is the sector you should be in because people are buying this, precious metal or whatever it is. That's exciting. And it obviously appeals to people's greed as well. And also at this time as well, when, there is a lot of uncertainty in the world, and we want to think that there's someone out there who understands it. And maybe that there's somebody who can protect our life savings. I mean, these are our life savings that we're investing. And so we are inclined to believe people who say, yeah, if you invest with me, I can protect you from the worst of the downturns. But as we've seen again and again, it just doesn't happen. And actually the active funds tend to fall even further than the index.
Wow.
And actually, sorry, there is one other thing I didn't mention. I kind of touched on human nature there, but that's such an important point that we will always want to do better. We will always want to think that there is someone who can beat the market. We're competitive animals. We want to beat the next guy. That's how humans have evolved. But investing doesn't work like that. It's not a competition. We can all succeed at investing. So those are the main reasons why.
Brilliantly said. Yeah, amazing. Look, the other thing I wanted to, just for the viewers, is ask you is, we talk about market timing, we talk about active investing, so mainly stock picking, all the value investors out there. Can you just explain that, like, sort of briefly for the viewers, and if there's anything else as well that, like, when we talk about evidence-based investing, because you are the evidence-based investor, what exactly does that mean, just for anyone that doesn't know?
Well, that's a very good question, and I get asked this a lot. Why do you call yourself evidence-based investor? Surely all investing is based on evidence. Actually, if you look at it, it is not. What it's based on is hunches. It's based on theories. It's based on predictions and guesswork about an unknowable future. It just should be obvious to people that we can't predict what's going to happen tomorrow or the next day, or in 6 months' time. The problem is that markets are hugely efficient. The financial markets are like a giant supercomputer. They are aggregating the opinions of the smartest people all over the world, and people are trading, or there are tens of thousands of trades every second of every day. And every time somebody trades, they are expressing an opinion about the value of a particular stock. And if you think about all these millions of people around the world, all the time, tens of thousands of times, every second, expressing an opinion about the value of a stock, you're going to get a pretty accurate, picture of what a particular stock is worth. Now, that's not to say that things can go up and down very quickly, which of course they do. But why do they go up and down very quickly? Because there's new information. Something happens, like, I don't know, some rioters storm the US Capitol, or a pandemic breaks out, or we have new information, which let's face it, is unpredictable. No one can predict the news. That's why it's called news. That's effectively the problem. And evidence-based investing is saying, what does the academic evidence, what does the peer-reviewed academic evidence say about the best way to invest? And broadly speaking, it shows that the best way to invest is to avoid stock picking, market timing, to invest in low-cost, diversified index funds that give you exposure to all countries of the world, or all the major economic countries of the world, at low cost, diversify, dampen your risk by having exposure to an asset such as government bonds, which generally don't deliver very much, but they, as I say, dampen the risk. They do the job, if you like, and help you to kind of stay the course when markets crash, like they did last March, for example. Rebalance every year or so, mean, depending on which country you're in, I'll be honest, I'm not sure about the situation in Australia, but certainly in America, for tax reasons, it's good to rebalance twice a year. Here, I would say in the UK, once is enough to restore the original asset allocation, but otherwise do nothing. That's what the evidence says.
Brilliant. There's so much I want to say to everything you're saying, but you're saying it so brilliantly that I just don't think it's necessary. The only thing I will comment on is something that because it's something that I keep mentioning all the time on my channel, and it's great to have someone out there with so much more experience, and you've spoken to all sorts of experts. I recommend people go and check out your website as well. I'll have that link down below. It's just a simple fact that you cannot predict the future, so why can you predict the stock market? And then further to that, it's like, okay, let's say you believe there's these little inefficiencies in the market. Well, why is it that people think that they are the top 0.1%, the smartest person with the most knowledge to be able to beat that? And it's just, there's so many issues with it that it's amazing. And then my next thought from that is just from a broader perspective is, well, if you look at almost any other industry, people are always going to, medicine, they're always going to say, well, what's the evidence? What does the academic research show? In the stock market, we're investing more broadly. No, it just doesn't seem to apply. It just seems to just not matter. And if you say it, like as you mentioned, you're almost you're the odd one out. So you're almost crazy.
Well, it's interesting. I mean, you mentioned medicine. You could say the same about law. And all the major professions, vets. Well, you have to train for years. I mean, at university, we all know that the people who work hardest are the sort of medics and the vets because they're reading the evidence. But you can become a financial advisor without, depending on where you are in the world, you can become a financial advisor with next to no qualifications, and frankly, it shows. Even very experienced advisors I speak to, or read or see commenting in the media and so on, it's quite clear that they actually haven't read the basic books, textbooks, let alone the actual university research that evidence-based investing is based on.
Absolutely. I mean, when I was speaking to Ben and a few other people that went through university, in this area for various different reasons, but in this area, they basically all said to me, they're not presented with the evidence that comes out of those universities. So they're quite literally, I suppose, indoctrinated with this wrong mindset. And then they go pass it on, not out of necessarily malevolence, but because they don't know better. So I think it sort of is, I guess you could say, even systemic. It's just going through it.
And I as well, while we're on the subject of academic background and education, I think this is another problem. I mean, I remember interviewing Professor David Blake, who is quite a well-known academic here, based at the Cass Business School in London, and he's done lots of research on how poorly active managed funds perform over the long term. And I remember asking him about, why, that same question you were asking me earlier, why so many people, invest the wrong way. And he said, largely it's the media. And the problem is that journalists come out with, arts degrees like myself, English, history, classics, whatever it is, and just do not have that kind of mathematical mindset that you need. I mean, to be honest, evidence-based investing is not complicated maths. I mean, you can, you can be as complicated as you want it to, but it's basically simple maths that as Jack Bogle, the founder of Vanguard, said, when the returns you get are the returns of the funds you use minus the cost of the fees and the charges. And clearly, when you're using an actively managed fund, I mean, here in the UK, you can be paying 10 times more, 15 times more for an active fund than a passive fund. Compounded over time, that's going to make a massive amount of difference. it's not complicated maths. It's just simple arithmetic that, on average, the average passive investor must, after costs, outperform the average active investor. It's not a maybe or a might. It's a must. There's a very good paper actually written by a guy called William Sharp, who is a Nobel Prize-winning economist from California, and it's called The Arithmetic of Active Management. And honestly, it'll take you 10 minutes to read, and you really don't need a Nobel Prize winner, believe you me, to tell you this, but it just basically says that all you need are the simple rules of addition, subtraction, multiplication, and division, and you can guarantee that as a passive investor, you will be one of the winners over the long term.
Very interesting. Let's talk a little bit about your efforts to spread the message and like how much success you've had with that. Like, how do you feel, all your work, like what sort of impact has that had? Has it been successful for you? What sort of barriers have you reached? Because I know, that's where we sort of really intersect. I mean, that's sort of what I'm trying to do in part on my channel is push people towards the research.
Yeah, well, that's you're doing a noble thing. I mean, when I set out on this journey, I thought, crikey, this is going to be a piece of cake. I've got all the information, all the evidence on my side. Reams of data. Dozens of research papers. It's all there. All I need to do is show people the evidence. But as we know from the Brexit, referendum, as we know from, if I'm allowed to say this, Donald Trump, people don't actually read the evidence. People aren't really, most people, don't make decisions based on data and evidence. They make decisions on gut instinct and emotion.
Yeah.
And so really from the outset, I just realized that it was going to be very, very, very hard to do. It's taken years. I've been doing this stuff now for about 9 years or so. And only now do I really feel that we're winning the argument. In America, they've sort of been, people like me over there, Jason Zweig on the Wall Street Journal, Jonathan Clements, also from the Wall Street Journal, who now works as a writer and blogger. And you've got some brilliant bloggers there, Josh Brown, Barry Ritholtz, and so on. I mean, they've been sort of winning the argument for a while. In the UK and Australia, we're still kind of playing catch up a little bit, but I think we are finally starting to get our message across. There's a quote. I don't know who said it. Apparently Gandhi maybe said it, but first they ignore you, then they laugh at you, and then they take notice of you. And that was it. When I started writing this stuff, people just didn't bother, but then they sort of started to mock what I was saying, and then they sort of started to get a bit hot under the collar and angry about it. We're winning. We're winning the argument.
Awesome. Yeah. Thank you for sharing that. I mean, I certainly think that it is going in that direction. I mean, when I spoke to Ben, he's got a whole community going on there that I didn't even know was as big as what it is. It's amazing. I mean, I know you're on a podcast, that's how I found you. Yeah.
He's done amazing work, Ben Felix. It is very hard to content marketing, which is effectively what Ben is doing. He works for an excellent firm, PWL Capital, and he kind of effectively what he's doing is content marketing, and it's not easy to do, especially when you're up against the big sort of banks and asset managers who've got massive pay-per-click budgets and so on. They're all over the Australian Financial Review. You know, they only have to send out a press release, and they've got 10 journalists want to write about it. When you're the Aussie money man or the evidence-based investor working out of your back bedroom, it's with little or no budget at all, it's very much harder.
Absolutely. I mean, I know the sort of small challenge I've had is that here in Australia, us finance YouTubers, we started 2.5 years ago. Like, there was no one in Australia talking about personal finance on YouTube, and myself and another guy called Brandon were the first two, and he happened to be a value investor. So now, 2.5 years on, the community is massive, but because he happened to, like you just mentioned before, get that extra attention because of, it's a lot more interesting to say, here's what Warren Buffett's buying than it is to say, I'm doing the same thing, I'm buying into the VT, the World Index Fund, 2.5 years later. And now we've got a few hundred of these small Aussie YouTubers doing the value investing method. No one else is, on my sort of end. And so it's well, overall, I think it's going well. I mean, I'm really fighting an uphill battle.
Well, Jason Zweig, who I mentioned earlier, the Wall Street columnist, he said, his battle is saying the same 20 things again and again and again without his editor actually noticing. And unfortunately, that's the problem. That when you write about stock picking or fund, choosing funds or whatever, there are always things to talk about. There's always ideas and theories and hunches and data and everything else to talk about. But when you're talking about sensible investing, you're basically having to find interesting ways of saying the same things again and again, and it's not easy.
Absolutely. Awesome. Well, look, I'll leave it there. If there's not anything else that you want to say or any other wisdom that you want to impart upon my viewers here, I'll leave it there. We'll be chatting for about 25 minutes now. But look, thank you so much for your time. And I personally, and I'm sure many others, appreciate your work.
Oh, that's very kind. I would just say, keep it up. I mean, the other thing I would say is it's rather like investing. Compounding with content marketing. Compounding is really important, and the earlier you start, the better. The more persistent you are, the better. And when you start out, all these people, Carl Richards, Josh Brown, Barry Ritholtz, they all say, it was only their mum who was listening for the first few episodes, but eventually they realize that all that work pays off. So don't give up. Stick at it.
Thanks so much.
You're doing a great job.
Thanks for coming on.